looks like there's a bit of resistance on the 169 area. If it does go past this level, I'm hoping for it to test 186, well, at least 182. How much of that pre-market data is relevant or reliable, but I usually tend to see that price, if it does gain strength, then it does test the pre-market highs at least. But 185 to 199 will be my target. 198 will be my target for today, for now, unless something goes terribly wrong. There's a chance that price might come back and test 143. I should have kept an eye on this actually before I entered the trade. Rushed in with a 158 entry and a test of 143. Yeah, I could live with that, but anything below that is my risk probably, and I'll be aiming for $2, which is about 42 points, and my risk at this stage would be about 18 cents to 140. So I will stay in the trade until kind of 143 gives. At this point, looking at the 5-minute chart, I'm not too worried as we're heading towards the 162 mark to test this region. If we do break past the 50 moving average line on the 5-minute chart, then I'll be quite hopeful and perhaps aim for 182, 185. Perhaps just watch the market closely at that point and see how it goes. I do get a bit jittery watching a 1-minute chart when price is approaching my target levels. For some reason, I get too trigger happy. At this point, it looks like there is a bit of resistance here, but I need to continue aiming for at least 180 to 186. So I'm gonna keep an eye on the 5-minute chart instead, just to keep perspective of the broader move and not risk exiting too early. Just sometimes I find myself playing too safe and letting my losses run too long, but my profits, I cut them short. Don't want to speak too soon, but yes, let's monitor this closely. What I'm looking at now, a shooting star slash long wick at the top, so that tells me there's lots of sellers here coming in, whether people taking profit or new sellers coming in. And if this candle closes looking something like an upside hammer as it does now, then I may look to not aim for anything beyond 168 in the next 10-15 minutes, and I will look to exit my position around this level and look for a re-entry. And that's purely because there's a chance that the price might come back down to 150 region again for a bounce back, as it is now already. So I'll probably wait I don't want this 5-minute candle to close as a red upside down hammer. That would be a bad sign for this price in the very short term. 9 more seconds left. Right, could have been worse. But again, indecision in the market, also weakness in the price. So I'll probably exit at this point just because I don't want to hold on and probably get a better entry later down. Quick confirmation. There's a chance the price might bounce back from 50 moving average line. It has kind of followed that line quite closely. Whether or not I stay in the market right now, it's a difficult one because I might get a pullback to 152 anyway. 158. Yes, I will exit at 158. Loss of bias at 158 tells me, oh, there you go, that there might be a short-term test of 160 region. If it does go beyond 166 again, then the trend may have been reversed in the short term. I know I wanted to exit, but I'm starting to see kind of some form of, maybe too optimistic, but some kind of stabilization happening here. There you go. So perhaps I'm gonna wait because I may not get my pullback for a re-entry at 150 or 148. So I will stick to my original stop loss for in the 145-46 region for now. Finding it quite hard to read the price action right now. Lots of wicks on red candles does not fill me with a lot of confidence, but as we said, we will probably stick to 158 entry for now and end up waiting to see if the price falls beyond 146. Then we may just cut our losses. I'm trying to think about my trade from a couple of days back on NVIV, where I didn't wait for a wide enough stop loss, and the price did actually retrace back quite a bit. So I've decided that's why that I will stick to my 14 cents per share stop loss on this trade, just to see maybe widening my stop loss with a better target helps a little bit. And the price did actually go quite far later on in the day, so let's see if that learning helps in this trade. I also need to remember a couple of minutes ago when I was looking at this candle and I was getting worried that there's indecisiveness in the market, the fact that this candle closed red, and I predicted that the price will end up showing some short-term weakness. For future reference, I need to remember when I see these candles in a 5-minute chart, I need to step back from the market for a little bit for a better re-entry. I'm not much worse off by not doing that, but I could have just exited the market around 101.62. But something to keep in mind for future trades, perhaps. It looks like the range between 150 and 160 is quite significant for some reason. While we wait for the price to keep chopping up and down, let's revisit the charts a little bit to see what's happening at 150. region. So we've got this high volume day open price at 143, I think, from almost a year ago. And then we have lots of support around that price and choppiness, but also, there's a big support resistance level that was kind of followed by the stock from a couple of years back. So probably some traders are watching those levels too, who knows. Probably why explains why there is a bit of choppiness around this price. Well, that's what I think. I could be wrong. I'm still aiming for 174, which was the level that was tested. That was the closing price from about 7 or 8 days ago. Hence probably why it explains why this price spiked right to 174. That could have been a good exit for me at 16 cents per share profit, but I had already risked about 16 cents when I decided to stay in the market when the price pulled back to 147, so I wasn't quite satisfied with 18 cents profit, 16 cents profit. Yeah, I could have taken half my position off at that price, but hey, we've changed our risk tolerance and we stay where we are. So let's see what happens. The price has broken through the 50 moving average line. Did touch briefly the 148 level. If it does go below 46, 47, it's going to go for a complete meltdown, in my opinion, at least in the morning trading session. Probably go as far down as 140, and if it does go below kind of 140 region, then it might go on a free fall, and it could be 120 or even 112. So I really need to watch 146 level very carefully. If it does go below, I should get out and wrap up on this trade. You would have thought that probably waiting for a pullback to enter would have been a better strategy, probably somewhere around 153 to 174. So 20 cents profit, quick in and out on a dip buy. I did not do that. It looks like I did hope for a home run, thinking it might just spike on one go, but then it didn't. Mistake number 2, I didn't exit here, or I forgot to pay myself a little bit, perhaps closing half my positions. But then again, there are stocks in the morning, in the first few minutes, that don't actually pull back and then they just continue up and up and up, or even after the first leg down, they continue up and up and up. So it's as best as anyone's guess, probably, for me at this stage. So as long as I stay close to my risk levels, I know where they are, and watch the market. I'm happy for this trade to go either way. So as they say, no emotions. If it's a red day, it's a red day. If it's a green day, it's a green day. You move on and hope for another green day. I think the price is on track for a test of 163 again. If it does fail at this stage again this time round, then it will need a significantly more momentum to pull back and then go back up again. So failure at this level, I will look to exit. Right, we're back in the danger zone, risk territory. Like we said, anything beyond 146, below 146 will trigger a assessment of whether we want to exit the trade. So we will keep a very close eye on this. If it does bounce back up 148, great, but unlikely will, because if it's retesting the same, it's broken the uptrend, upwards trend already, so unlikely will come down, come up. Wolf, nope, not the stock to be trading today. OKYO, no. SOUN, still doing well. TCBP, right, 143, I should have seen that. Right, limit, exit, because I don't want to be exiting, selling into weakness. I want to exit at 146. 146. That's a big red candle that I do not want to be holding a position through. 1 minute. That's one of the reasons why I don't like automatic stop losses, because the spikes down, it can take you out even if you're like 3 or 4 cents away, it still does. Right, trying to time my exit here. Probably 44 is a good price to exit. Don't want to hold on anymore. That's 1260, or roughly 14 cents loss, and looks like it was the right move. Look at that. I'm glad I did exit. Within 20 seconds the price did go back down. Now I will keep the stock in my radar, because overall on the daily chart is still kind of looking like there is an opportunity to get in on this trade at 137 area. There might be a chance they will pull back up again. But for now I will focus on SOUN. Right, so it wasn't a bad move after all, exiting at 144, as the price now sits at 138. Whether or not it will keep going down and further, I still think but it might bounce from 137 in the short term for another run at 158 or 152, but it's getting too noisy and I don't want to hold on to a trade for 3 hours to see if it bounces back at the end of the day. So for now I will stay away from TCBP and focus on SOUN.